All right, welcome into Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy. Thank you for tuning us in, especially at this hour day. If you watched the Super Bowl last night, I know it was late for me. It's probably late for you as well. But let's get into these markets and see how we closed some of them out on Friday, and then what the overnights did as well. Let's take a look. We'll start with corn. What's going on in corn? All right. There wasn't a lot going on, I can tell you, from the radio show that I just did this morning, but we're down or up 2 1/4 cents. 431 1/4 is last, and that's the March. That's up front, right? Look at the range, 3 3/4 cents. So nothing really too big to talk about. The low is 429. So we've been pretty positive all day. But again, this is only a 2.5 cent move. New crops up 1.5 cents to 469 3/4. Those are the overnights there in corn. Let's go to the beans. That's got almost a double-digit gain on it. 9.5 cents up front. That's higher. 11.93, making a move towards 12. A penny and a quarter off the high of the day. Let's go out and say, July is up 8 3/4 cents at 1208.5. How about Chicago wheat? Let's take a look at that. Chicago wheat, well, that's down. March down 1 3/4 cents to 5.95. Can't get that 6 handle back. Look, the high was 5.99 1/4. We're 4 cents from the low of 5.91. And if you go all the way out to say Deese, that's down 4 cents there to 6.17 1/4. From the wheat in Chicago, we go to Kansas City to see what the hard red's got in store for us. And we're sharply unchanged overnight in that March contract, 601.5 as we hold on to that 6 handle there. We've lost it in the May. That's down 0.5 cent to 5.99 even. We did get a high of 601 1/4. So not a whole lot going on. We can't make too much of this wheat board so far with even Chicago or Kansas City. Let's see if spring wheat in Minneapolis has got anything better for us. Here we go. It's a little bit better, isn't it, right? March is down 1 3/4 cents up front there, 682.5 last. But as you go out the defers, we gain a little bit. Look at that. All the way out to Deese, we're up 2 3/4 cents to 704. That's the only print of the day. SEP is 692. That's up 1 3/4 cents. And that is the low of the day. So it was a gap open. Wow. All right. So there you go. That's spring wheat. And then finally, let's take a look at cotton. And we'll get to our next guest analyst and see what he's got to say about what the day is going to be doing for us here. March cotton down 81 points overnight. 90.97's last there. All right, let's bring in Brian Hoops. He's with Midwest Market Solutions. He's the big shot there. He's the president, CEO, founder, whatever. After probably a little later night than you'd normally like to have on a Sunday, what are your thoughts about this Monday morning open?
Yeah, what a game it was. Here in Missouri, everybody is a Chiefs fan, especially when they're winning like they are. So what a great game, and I thought it was fantastic. But like you said, a little bit of a later night with overtime. We did not make fresh lows overnight in corn and beans. I think that's kind of contributing to this rally that we're seeing overnight in corn, beans, and meal. Technically, we're just in the dumps in here. We close 13 out of 14 weeks lower in soybeans and 8 out of 9 or something like that in corn. And on a daily chart, we've closed corn lower 4 consecutive sessions. 6 out of the last 7 sessions have been lower closes for corn. And the fact that we were not able to take out Friday's lows, I think, as I said, contributed to this little bit of a bounce. You just don't have really any bullish fundamental news to hang your hat on here. Corn harvest in Brazil, soybean harvest, all running ahead of normal. The second corn planting is about 28% done. Normal is about 21%, so we're ahead of the pace there. It's hard to find any real friendly fundamental news to hang your hat on that, hey, the corn market's bottom, soybean market is bottom, and we're going to rally. In fact, we could see a little bit of a bounce in here, I think, and then we look at big ending stocks, probably going to see fairly large deliveries at the end of the month, and that's going to pressure those March contracts once again.
I think it's important. I think you bring up a good point. You kind of talked around it, but it is a good point, and that's the fact that, sometimes we can get a little bit too myopic, right, Brian? I mean, sometimes we come in here and look at these prices on a day-to-day, minute-by-minute basis, and sometimes you just have to take a step back and go, okay, where's this going? I don't want to live and die by every tick up and down, and lately they've been down. But you want to kind of take a step back and kind of build a little bit of a strategic plan without getting too caught up in that minute-by-minute minutia, right?
Yeah, exactly. If you look at the daily charts here, you're everything is terrible. And if you get one day higher, Twitter world is going to be screaming that the bottom is in for these grain markets, just as they have been since last fall. Everybody's trying to pick a bottom here, and it's not going to happen here in mid-February, very unlikely, unless you get a major news event to turn things around. Now, after you get through deliveries, and then you start looking ahead into weather in the U.S., planning intentions. Yeah, then maybe you can put a spring or late winter low in and see some sort of a sustainable rally. But to sustain a rally here in February while harvest is going on in South America and they're dumping crop on the world and exporting corn, soybeans, pretty unlikely, I think.
Yeah, I agree. All right, stay right there. We need to go away. We're going to pay some bills. We're going to come back and talk more livestock with Brian Hoops, Midwestern Market Solutions. We'll be right back after this. All right, welcome back. It's time to talk about livestock and what they did on Friday, right? You know what? I can remember like it was yesterday, but it's really 3 days ago, but it was really, really quiet. We were a little bit better, but let's take a look and see how much better we were. Look at this. All right, this is live cattle. This is how we closed out Friday. Anywhere between, say, a nickel higher to 85 cents higher. Most of it loaded up front, but April's up 15 cents. Can't really get too excited. 186.72 was the close there. And we had about, what, I don't know, $1.60 range, so nothing too big. June was up 25 cents. This is live cattle. 183.97, so we were up, but just slightly. You know what? It's better to say steady better. That was what we were. Live cattle to feeder cattle. Let's go to the feeders, and they were just a little lower. Up front, we were higher. That's what made it look okay. 30 cents higher in the March. 247.15 was last there. That's where we closed it, and then we ended up losing a lot of leaking out the back here. August and September were off over $1. August down $1.15 at 269.45, and Sep ended up down $1.32 to 271.30. So back months, the deferreds, whatever you want to call them, they were kind of a little lighter, right? A little lower. And then lean hogs. Let's take a look there. And this is another steady, little bit better one. We didn't want to get too myopic. April closed up 80 cents on Friday to 81.15, and the May closed up 40 cents to 86.22. And let's get back to our guest analyst and see what he's got to say about it all. Let's bring back in Brian Hoops with Midwest Market Solutions. Brian, anything over the weekend or anything you saw in the press that's going to change your mind about what we're going to be doing here Monday morning?
Oh, probably not so much in the cattle, Scott. It's, it was a bullish cash market last week, very much above expectations. We were 182 in the South, $3 to $4 higher. We didn't see any deliveries against February contract on Friday afternoon. 289, 290 dressed. You're looking at $9 to $10 better on a dress basis. So cash trade remains red hot. Packer margins remain deeply in the red, pretty much similar script to what we saw last week. You're going to see this week anyway, Packers buying for holiday short and kill week next week. A lot of them will be closed because of President's Day on Monday. So maybe they try and leverage the cash markets down a little bit using that smaller kills as a way to try and prop up some of their margins. So I don't look for another big advance like this in the cash markets because of the smaller kills next week. Probably going to see a steady type trade, but no doubt the feedlots early in the week going to be looking for a couple dollars higher. Otherwise, you're left with the markets that's priced in stronger cash trade already, and probably going to see some sort of a choppy trade affair during most of this week, I would think.
Yeah, we also got CPI and PPI. See what that does to the outside markets. That could also give us a little bump either way, right?
Exactly, especially when you start talking how that affects the U.S. dollar, consumer demand, consumer spending, all that goes into play here.
Yep. All right, man, great stuff. Thanks for kicking us off. A little bit of a pun there, right? All right, thanks for being on. Brian Hoops. He's with Midwest Market Solutions in down in Missouri, and I am going to bring it back home and hand it back over to you.